How's it going, everyone? My name's Sam. I'm coming over from the channel My Financial Friend, and I come and make videos here on TipRanks once a week. I wanted to talk to you today about Senseonics. This is a continuous glucose monitoring system company that's come up from under 40 cents a share all the way up to $5.30 and now back down to about $3.35. I want to talk to you about them here today, talk to you about what has happened recently because they announced earnings, and kind of give you an update. I know a lot of people on my channel were interested in this, and a lot of us made a good amount of money on this, so I wanted to give you an update here today. Now, just off the bat, if there's anything you like from TipRanks in this video, any different tools, you can check them out underneath the video, or you can sign up with TipRanks Pro to get an unfair advantage in the stock market. So let's take a look here. Their market cap is just under 1.5 billion. Their average volume is about 25 million a day. They have, like I said, increased a lot in price over the last year and are being valued much more significantly than they were in the past. Now, analysts do have a bit of a high rating for them. So the highest price target's around $6, the average price target's around $4.50, and the lowest is $3.50. That represents a pretty good upside of about 38% on average. You can see that most of the analysts have reiterated recently their price targets here, and they're giving buy targets right around $3.50 to $6, or price targets right around that level. Now, risk factors with the company. There are a handful. The holders of the convertible preferred stock rank senior to the common stock upon liquidation of our company. Shares of our convertible preferred stock, including shares issuable under the equity line agreement and energy capital and the PHC notes, are convertible into shares of our common stock, and upon conversion will dilute your percentage of ownership. Holders of the convertible preferred stock and convertible notes have the ability to have substantial influence over us in a manner adverse to your interests. So you can see there are a lot of risks that come with it because of the fact that there can be significant dilution, and this is just a high risk stock in general. This is a small biotech company that really does not have significant revenue yet. Insiders have sold just a small amount. It's barely even worth noting, but in case you see, hey, they are selling, well, it's $1.4 thousand over the last 3 months, so it's not really that big of a deal. You can see who is actually selling it, and they are uninformative sells and buys. They're just set on a set schedule. So let's take a look at the news. Let's take a look at some of the recent earnings. So recently, they delivered their earnings. They had a loss of 5 cents per share compared to the estimate of 2 cents. Now, they have also beat on revenue, which obviously was a good thing. You always want to see your company beat on revenue. So they surprised by about 9.7%. So looking at their actual earnings, let's take a look here. Over the last couple months, they've generated revenue of about 3.3 million. Essentia Diabetes Care launched both a U.S. patent assistance program, reducing out-of-pocket costs to support all diabetes patients, including the 200 million covered lives, and a direct-to-consumer digital advertising campaign to raise patent awareness of Eversense and generate new patent leads. Now, just a reminder, if you are coming into this not knowing what Senseonics is, they have a continuous glucose monitoring system that works for 90 days. This is much longer than some of the competitors, and they are waiting on their 180-day system, and that is currently at the FDA. It got pushed back a little bit because of the Rona, but they're expected this approval in 2021. So a lot of people are waiting for that any day. They're really excited that this 180-day system will get approved. They are now working with Essentia. We talked about that in their earnings. They have made this large relationship with them, and they have BGM devices in 125 countries across the world. So they are a large partner of theirs. They say the PROMISE study, an evaluation of the safety and accuracy of the next generation 180-day long-term implantable Eversense CGM system, demonstrating sensor accuracy MARD of 8.5 to 9.1%, was presented in June at the ATTD and ADA conferences along with submission of the manuscript to a major diabetes journal. So they had significant results. They were quite promising from their 180-day system. That's really good with the approval of the 180-day system on the way. FDA active review continues for the Eversense 180-day PMA supplement application. They raised $50 million in gross proceeds from an at-the-market offering. They say in the second quarter we made progress driving increased patent and provider awareness of Eversense through a targeted direct-to-consumer digital advertising campaign and presentations of the PROMISE study. As announced when we submitted the data to the FDA, we are pleased with the strength of the data from the PROMISE study, which we believe presents a top-tier CGM safety and accuracy profile. Along with our commercial partner, we are excited about the opportunity to offer more patients the longest-lasting CGM systems. So overall, they did beat on revenue. However, they did have a significant loss for the quarter. You can see they had about $3.31 million in research and development. They had general and admin expenses of $7.5 million. Net loss was $180 million or 42 cents per share in the second quarter compared to $7.5 million. Net loss increased $172.8 million due to a $169 million increase in other expenses primarily related to non-cash accounting charges resulting from the accounting of embedded derivatives related to certain of the company's financings, as well as $3.36 million increase in loss from operations. Now, they still have a good amount of cash, about $215 million. They're expecting revenue of $12 to $15 million for the year. So what we want out of this company is for them to have increased sales, obviously, right? We always want larger and larger revenue that will bring in more profit as time goes on. But we also want that 180-day system to get approved. That is really the short-term catalyst, while increasing revenue and profitability is the long-term catalyst. So hopefully they can become a major competitor in this space, but this is a long-term hold in my opinion. Now, of course, I'm not a financial advisor. I'm not a stock analyst or anything like this. I bought around $1.70. Then I also bought when it fell back down to $1.50. They did a at the money offering, so I bought more at $1.50. I trimmed around $4. I think it was right around $4.10 or $4.20, and then I've been holding the rest. So overall, I think this is, again, not financial advice. This is an interesting play as a small portion of a portfolio, a very small portion. It is less than 1% of my portfolio, but it is something that I'm holding. If they come out with their 180-day system getting approved, maybe I'll trim even a little bit more because it will probably pump up and then dump off on that news. We constantly see that in stocks like this where they have some catalyst, they pump up very quickly. You can see that here, and then they fall off. And then they might pump again and then fall off a little bit more. Overall, though, this is a highly speculative play. Of course, always do your own research. If you guys want links to anything that I used in this video on TipRanks, they're underneath the video. And I will see you in the next one.